Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the News Driven Hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money at 4, live on the air here in 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, tonight is the night. Big debate tonight between President Biden and former President Trump, which you'll hear this evening at 6 right here on 790 KBC. Looks like the economy already getting a bump. Looks like bars are going to be busy. Drinking spots are anticipating sizable crowds this evening, sort of like a big sporting event. The overall economy, taxes, and the geopolitics, of course, expected to be big issues during that debate tonight. We'll get a preview this evening with economist Kevin Clouden, prominent California economist, chief global strategist at the Milken Institute based in Santa Monica. Energy policy also expected to be a big topic, and I'll talk about that, as well as inflation with oil industry analyst John Kilduff at Again Capital and CNBC contributor. Ahead of the festivities this evening, the stock market ended the day slightly higher. Stocks ended up with the S&P 500 and NASDAQ scoring a three-session winning streak. The Dow coming in for a closing gain of 36 points. The S&P 500 moved to 5, and the NASDAQ gained 53 points. Tomorrow morning, first thing, inflation will be back in focus. We'll be getting the PCE inflation report, as well as the end of a strong second quarter. The S&P 500 up about 15% in the year's first half, putting it on pace for the best first half to an election year since 1976. Looks like the S&P 500 and NASDAQ also just shy of all-time highs. On the economy today, we did get a new reading. The economy's performance in the first 3 months in the year did not look much better than the third time around. The government's latest estimate of first quarter annual growth was lifted slightly to a lackluster 1.4%. That was pretty much in line with what analysts were expecting. Also, initial jobless claims for the week ending this past week were 233,000, down from 6,000 the previous week. Crypto back in focus with investment manager VanEck's application for a spot Solana exchange-traded fund. Unlikely to be approved anytime soon, but the move is still bullish for cryptocurrencies, according to market participants talking to MarketWatch. Looks like the Magnificent One NVIDIA taking a breather today, down more than $2 to $123 and change. Amazon continues on a roll, hitting a record high, just shy of $200 now, more than $4 at $197 and change. And Apple has had a big year, up 85 cents at the close today to $214 and change. On your money, the markets, and the economy, the debate tonight and the whole works. Let's bring in chief investment strategist and portfolio manager at Mint Asset Management, Brian Perry at mintassetmanagement.com, also author of the 25% Cash Machine. Brian, thank you very much for taking the call. A big news day today, and of course, we'll all be watching the debate tonight. Give us your assessment of things here at the moment.
Thank you, Frank. Yes, today was somewhat of a lackluster session here in front of all this. We've got this big debate tonight, and you've also got this PCE number out tomorrow here. So inflation is still the larger topic, I think, for the economy going forward here. And at the same time, we've got this. It's a very pivotal, election season here, and it's just it's going to have everybody kind of wondering what happens after this and who gets some momentum going into next week. The what I'm seeing here for the core PCE tomorrow's coming at like. The economists are calling for 0.1%, which implies a 2.7 to 2.8% annual inflation rate, which is pretty much stable from last month here, but still moving in the right direction here. We're looking for some better data on new and used car prices here. Should be stabilizing here to lower insurance premiums for all manner of things, whether it's cars, homes, medical, and all that, to be stabilizing as well. Shelter index is still going to be pretty hot, and the rents have they dipped and then they started moving back up here. So that's the largest component, which could keep this number here in play. And and home prices, have been coming down in the hottest markets like Austin, Nashville, places like that. So they're starting to see some new home sales here that have peaked and have started to ebb. And gasoline prices are cooling as well. I'm seeing gas prices out here on the East Coast at just above $3 here, like $3.09, $3.10 here this week. So there's good and disinflation in the pipeline, Frank, and this is starting to, I think, become a nominal trend. but it's a slower. They're still higher for longer. No expectations for a rate cut in July. That's still pretty much 90% of the bond futures traders are still looking for, for Fed funds to remain at 5.25 to 5.5%. And then with about a 50-50 chance of a cut in September. Much of that will be predicated on the data going forward here, as the Fed has laid out many times. The what we're seeing here is per present the global economy here, the most of the metrics that are coming out are starting to actually pick up a little bit here. So this is good news for the global economy. Coupled with falling inflation means that PE multiples can expand here going forward here, and so that's a big takeaway here for my world, because I'm always looking for, how can PEs, not only justify their current, valuations, but can they expand further? And with falling inflation and a pickup in demand, then we can see maybe the S&P 500 earnings estimates move from $260 for 2025, maybe as high as $270 to $280. That would imply a market here that could trade up to 5,800 to 6,000 here over the next 6 to 12 months. So I think that there's a bit of a tailwind here if all this starts to play out as well as it does, and I'm feeling like there's with AI coming online here in a big way. 83% of all companies out there, Frank, want to have AI as their top capital investment priority. So with that in mind, that means that productivity goes up, costs come down, efficiencies are better managed, and profit margins are higher. And that's what happens when you put AI to work for your company. So this is all starting to kind of, where is AI really going to start to pay off? It's going to start to pay off here in the next 3, 6, 9 months.
On there live with Brian Perry at Mint Asset Management, also author of the 25% Cash Machine. Thank you for that. As always, a thoughtful analysis on the debate tonight. The economy certainly will be front and center, and we've been told many times that the stock market is a forward-looking mechanism. At this point, Brian Perry, what's the stock market expecting in November?
I'm looking for actually Trump to have a better night than most people are calling for. I think it's going to start out as a respectful exchange, and then I think it could get rather testy and ugly toward the latter part of it. That's kind of how I think it's going to play out, because I just don't think either guy can help themselves to throw some barbs at the other guy. What people really want to hear is, we got these problems, give me some solutions. And I just don't know if we're going to get there tonight. I hope we do. That's really what I believe that Joe Sixpack and everybody below and above that level wants to hear, is leadership, presidential leadership. Can you be presidential without just getting into a Donnybrook? So I'm really hoping that this is where it goes. I'm skeptical that it will, but we'll see what happens there.
Sure.
And come November, Frank, I think that all this is going to be on the table here. Inflation. How many? I think well over 50% of Americans now are living paycheck to paycheck, and that's really what matters. It's not anecdotal. It's very real at the grocery store, and at the doctor, and it's at the schools, and when you have to hire a plumber. All that's very elevated. So I think that's where Bill Clinton said it first. It's economy stupid, and I still think that really matters the most to people. And it's really who's going to lay that out tonight. That's going to really imply where we go from here in terms of helping everyone in the middle, that and not just those that have, and basically handing out trillions of dollars to those that don't. Go ahead.
Be interesting, to see if President Biden follows up on his pledge to raise taxes. President Trump, of course, pledging to lower taxes. Remember, we had that big debate moment years ago during the Reagan-Mondale debate, where Walter Mondale pledged to raise taxes and ended up losing in a landslide, and President Reagan was reelected big in '84. So let's see. We'll have a moment like that. Tax is certainly going to be a big issue. Inflation, as you mentioned, and the economy. So we'll be tuning in for that. Energy policy. So we'll be focusing on that later this hour as well. Getting back to the market action here, as you do, follow this on a daily basis. We did have that that rally late last year, when the polls indicated that President Trump was moving up on President Biden. So certainly the market is paying attention, it seems. So we'll see what happens after today, and we'll maybe get a clearer picture. So The Magnificent One, Brian, have we talked since the stock split? 10-for-1 stock split. Now NVIDIA's at about 123 and change, down more than 2 today. It's had a rough couple of days after hitting an all-time high on a split-adjusted basis. So what about NVIDIA here, based on what you just said about AI a moment ago?
Well, I think this is a really great opportunity for people here to pick up the AI stocks, the leading names right now, because we're in that in a period here of consolidation. Everything went parabolic here, into the NVIDIA split, and all the big names, really did well. Even Amazon's actually breaking out today even further. But with NVIDIA, it's sitting right at its 20-day moving average here at 123, 124. This is a really great place to pick this up. This company is on fire. There's still this recent this week's corporate update by Jensen Huang was very, very spot on. Talked about rolling out their next generation chips here, and I just think they still have this huge lead on the competition. So they just got another huge order out of this consortium out of the Middle East here. It was like $1.5 billion, and so the company is just really the companies are buying their chips as much as they can to warehouse these for future use in the event that they can't get enough for what they want to expand for. So I like NVIDIA here after the split, and I still think that this is where people they have an opportunity here, because you're going to come into the third week of July starts the second quarter earnings season in earnest, and this is a period where you get into summer doldrums and volume is lighter. Big traders are at the Hamptons, and you just want to have an opportunity here to buy these types of stocks when they drift lower. Most stocks, when you get in a light volume period like we are now, they don't drift higher, they drift lower. But they come down to their technical support levels here, and this is really where people have a chance here to buy NVIDIA. But and also the other leading names here that are also right smack in the middle of this, because you just can't find companies with this kind of growth rate in any other sector of the market. And this is a generational wealth building trade for people, that it's important that when you do get these opportunities in these leading names, to take advantage of it.
On there live with the investment expert Brian Perry. At this point, Brian Perry, let me ask you the big question that we always ask here, and that is, where are you putting money now and or taking it off the table?
Well, there's a couple things there. There's a thing that on Wall Street called a pair trade, and that's where you go long one company, you go short another company, because one company is just taking market share and the other company is suffering from certain fundamental issues. We saw Nike here miss numbers today, and the stock's getting hit in the aftermarket here. On the same side, they're getting hit hard, down 12%. You have On Holdings here, symbol ONON, which makes this very popular Swiss tennis shoe, and they are taking market share, and the stock is breaking out. It's a beautiful chart, beautiful breakout chart. So you want to be long ONON, and you want to be short Nike. Same thing in the coffee business here. Dutch Brothers, a company out of Portland, Oregon here, Bros, is doing everything better than Starbucks ever did, and from the standpoint of product and service, which is hard to believe, but they are. And so Bros is trading higher here, breaking out. Starbucks is breaking down, and they have a lot of exposure in China here. So that there too is a good chance to go long Bros and short Starbucks, SBUX. Noting the breakout trade in AI here, Amazon certainly getting a new fresh win, huge breakout from a 3-month breakout, a pattern here that looks good. Robinhood, Reddit, 2 recent IPOs here, trading well, gaining enormous amounts of count growth here in both stocks. Certainly in the AI trade, Dell Technologies here, liquid-cooled servers here at the edge, computing business here for AI. Apple breaking out, huge refresh cycle here for the iPhones global. Stock broke out new highs. I said NVIDIA. Avago, which is Broadcom Corp, AVGO. Yep. 10-for-1 stock split coming up here on July 15th, Frank, which is going to be, and they are, again, another technical breakout. Novo Nordisk, Wegovy, weight loss drug, just got approved yesterday to do business in China. Okay, that's just an enormous piece of news for that company here, NVO. And then and then coming off another name here is CVS on the heels of this really massive breakdown here in Walgreens today. Just a huge miss and all that. And lastly, the African e-commerce company here, kind of the Amazon of Africa, is called Jumia Technologies, JMIA, for those that want to speculate on e-commerce in Africa. Huge continent, very little exposure to e-commerce here, but an enormous opportunity here. Stock trades at $7.50 here. I started buying it today.
Let's talk about Walgreens for a moment, cutting their earnings per share guidance, planning to close more stores. They've been hit hard with crime here, of course, and in the Los Angeles area in particular. So they're announcing a significant number of store closures. The stock taking a big hit today, down more than $3 to 12 and change. What about Walgreens here?
You know, their vision, their mission statement was to be in every community, in America. When they bought, Walgreen boots too, and boots from Europe, and
Yep.
to their commitment, that was a wonderful, mission statement, and it just hasn't worked out, Frank, with this crime wave, and now they're having to really consolidate here and rethink their entire business model. And like CVS and all, they thought they'd bring the pharmacy to the companies and just show up at the corporations so they could do, physicals and minute clinics and things like that and all that, like CVS is doing. But you just have this incredible purge of stores that, from a standpoint of crime, that's really hurting this entire idea of having the local drugstore and the local pharmacy and the local clinic, just down the street here. It's very unfortunate here, and this is where you're going to see tonight. I think that crime is going to be a major topic that I hope that Donald Trump really makes a big deal of, quite frankly, because it's not being addressed properly.
Certainly, and it's a big topic of conversation, certainly on this program, so thank you for making that excellent point. Walgreens expected to close quite a few locations here,
Right.
so we're waiting to get some details as to where that'll happen. On the crypto front, buzz about a Solana ETF, and of course the Ethereum ETF buzz also had Ethereum hopping not too long ago, and Bitcoin has seen a wild ride lately, up about 200 now at around 61,500 or so. What are your thoughts here on the crypto moves lately?
Well, I'm liking what I'm seeing here. I mean, even Coinbase came out today and talked about how they're going to get into a big deal, a big partnership here with Stripe, which is still a major unicorn private company here, but one of the bigger companies out there for payment processing. So, and again, the whole business here of we're moving slowly toward oversight regulation here to the crypto world here, where the SEC and the FDIC and others, Treasury and all that I believe at some point they're going to have to basically say, okay, we're going to set up a set of rules here for crypto with the top 5 coins, and then start there. Tether also being another one, which is more of a dollar stable crypto. So I think that there's this area here where these cryptos have all pulled back. I think is a good opportunity for people to start legging in if they haven't already. I know a lot of people on the show are probably long all this stuff, but I've been talking about Solana here for a while. There's a direct competitor to Ethereum here. Actually, a better, more faster utility, but Ethereum is much more established here. But Solana, is coming up fast, and I think that's one of the coins I recommend here to one of my trading services here. So I'm a big fan of these types of trades when they pull back as much as they do. I just think that long term, it's a really good storehouse of wealth and also of as a hedge against fiat currencies.
Brian, thank you very much for taking the call. We'll let you get the popcorn started and get ready for the show tonight, as we all will be listening here on 790 KBC and watching, as the case may be. Investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Brian, great to speak with you as always. Thank you very much for taking the call this afternoon.
Always good to be with you, Frank. Thanks so much.
Thank you very much. And right out to the freeways we go now, 790 KBC. Folks, you know it. People like you and me are ear to the ground in all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well. And even still, we can get caught off guard as people are so focused on their destination that they might not have a plan. If they're in an accident, that is not their fault. That's why I encourage you to put my friend, Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Mottek on Money continues here, 790 KBC. Big night tonight. Yep, get that popcorn ready. The Dow up 36 points ahead of the early fireworks we're expecting tonight. The Dow up 36 points to 39,164. The S&P 500 of 5 at 5,483. And the NASDAQ at 53 points, 17,858. The yield in the 10-year note now at 4.29%. Crude oil futures moving higher, up 16 cents at $81.90 a barrel. Energy policy likely to come up during the debate tonight. I'll talk about that with oil industry analyst John Kilduff at Again Capital and CNBC contributor, of course, a longtime contributor to this program. We'll discuss it's the economy stupid theme for the debate tonight. I'll talk about that with prominent California economist Kevin Clouden, who will be joining us live in the next half hour. Price of gold moving higher, 70 cents, $2,337.30 an ounce. Silver up 1 cent at $29.27. NVIDIA taking a breather. The Magnificent One down more than $2, down $2.41 at $123 and change. We see Amazon continuing on a roll at record highs of more than $4 at $197.83. Apple up 85 cents at $214.10. Checking the cryptos now. Bitcoin up 223 at the moment at 61,566. Ethereum up 6 at 3,447. And Doge up slightly at 13 cents. Walgreens shares down more than $3 today at $12.19. Super Micro shares have popped today at more than 7%. Now the latest news for you here in 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. Tonight's the night. Big debate between President Biden and former President Trump, which you'll hear this evening live right here at 6 p.m. on 790 KBC. The economy, taxes, geopolitics, all expected to be big issues tonight. On those big issues, the two candidates are pretty much diametrically opposed in their views. Of course, the situation in the Middle East is now heating up. According to Haaretz, the Israeli newspaper, the Israeli army says 40 rockets fired from Lebanon at northern Israel. Half of them have been intercepted. And U.S. intel indicates war between Israel and Hezbollah is inching closer. We'll also be discussing energy policy, and which will likely also be a big topic this evening. That'll be coming up later this hour with John Kilduff at Again Capital and CNBC contributor. Of course, inflation, the economy, taxes, geopolitics, all big subjects this evening. Let's bring in now prominent economist Kevin Clouden, Chief Global Strategist at the Milken Institute in Santa Monica. Kevin Clouden, thank you very much for coming to the line here this afternoon.
My pleasure.
Wonderful to have you with us here. Give us your assessment of things here. President Clinton famously said it's the economy stupid, and here we are, the economy likely to be front and center in the discussion tonight.
Well, the economy is going to be an issue, and it's going to continue to be an issue regardless of the outcome of this debate in the presidential election. People throughout the United States, when they've been polled, have said they're not happy. They don't feel good about the economy. And they honestly haven't felt good about the economy for quite some time. So when President Biden talks about how the numbers are going, even if people might feel that things are looking a little bit better for them on the short term, long term, everybody's prospects are feeling down. The pandemic is still weighing on them. Debt is weighing on everyone. And stagnant wages continue to be an issue.
On the air live with economist Kevin Clouden, it's hard to believe. Of course, we were on the air back in those days, during the pandemic days. You were giving the updates weekly on what was going on, the economic impact of the pandemic and the vaccines and all of that, all those subjects. And, of course, last time we spoke, last time we had a conversation about Trump and Biden debating was back during those days, during the pandemic days. So that era has faded away now, but certainly the economic impact continues to be felt.
Well, what you're seeing right now, if you look at President Trump's message, I'm not talking about his tax plan, but if you look at his message is things were better, that his first 2 years in office were a great time, and a lot of people actually still remember that. They think and they say, back in 2017, back in 2018, the economy was humming, things were looking good. So President Trump's goal is to basically say, look, the pandemic happened. It's something that just took place. I had nothing to do with it. It derailed my great economy. It doesn't matter that if you look at it more closely, that the really effective policies in terms of the repatriation of capital in the middle class tax cut that were hallmarks of the early Trump presidency, both the effect of both of those had actually started wearing off before the pandemic, but people remember those good times. And President Biden, even though he's done a lot of stimulus spending, in fact, even President Trump did in his last year in office, people go back and look and say, well, you know what? Times were better before then. Times were better before the pandemic. Times were better when we felt like the economy was still working the way it should, before we had to debate whether or not in-person or remote work was better, when downtowns were slowing down, when people were spending less, before rents really jumped up. All those pressures that people have been feeling since the pandemic in terms of food costs, rent costs, inflation, all of those add up, and people are feeling nervous. And regardless of whether the issues started while President Trump was president or President Biden was early in President Biden's term, the fact remains that everybody feels uncertain, unhappy. And if you poll even further, you'll find that most respondents aren't particularly happy having to redo the 2020 election. They would like something new or different. So each candidate, I think, in this debate is going to try and say, hey, here's something different, or here's something that will make your life better. Whether or not people buy it is a different question.
All right. So a lot of people will be looking at their bank accounts and deciding whether they were better off then or not. And certainly on tax policy, a big difference in vision here, with President Biden basically pledging to raise taxes and President Trump pledging to lower taxes. Might we see a Reagan-Mondale moment during tonight's debate where Mondale pledged to raise taxes and was resoundingly defeated?
Well, the real question is where are the taxes being raised? And I think that's the big issue, is that the middle-class tax cuts that were built into the 2017 tax bill expired. They were intended, in fact, to expire because if they had gone by budget projections, they would have been too high and they would have raised the deficit too much. So by law, they couldn't actually stay. The problem is that if President Trump is actually going to restore those, then the question is, how is he going to do it? It's worth remembering right now that if you go by President Trump's plan, it's not tax cuts as much as it is substitution. It's basically taking the United States back to the 1890s, when most revenue actually came from tariffs. Nobody alive remembers what life was like back then. Nobody remembers any of that, or how economic policy worked, or how different it was, because we grew up in an era of income tax and free trade and all sorts of different other things. So this policy isn't even a matter of Reagan versus Mondale. This is, in fact, say, going back to William McKinley or William Jennings Bryan versus, I wouldn't even say FDR, but say Lyndon Johnson or something like that. Each of the policies aren't really things that we're particularly used to, because when you talk about Biden raising taxes on the wealthy and doing some of the actions he's intending, we haven't had anything really like that since the 60s and maybe early 70s. And we certainly haven't had a tax plan like the way that President Trump is proposing, in terms of all tariffs and lowering down and eliminating income tax, since the late 1800s. So for most people, these ideas are being bandied about, but they don't really have much connection to most people's memory.
want to offer my congratulations on an excellent Milken Institute Global Conference that wrapped up in May with so many of these issues discussed in great detail. And, of course, you were a big part of it, as always, Kevin Cloud. Let me ask you about the geopolitical topics here. Israel and Hamas at war since Israel was attacked by Hamas on October 7th, and now tensions along the Lebanon-Israel border, as I reported a moment ago. And, of course, you have the ongoing war between Ukraine and Russia, which all were discussed during the conference. Give us your thoughts about geopolitics heading into debate this evening.
Well, the real risk right now in both places is that the war is going on too long, and it's affecting things in different ways. In Ukraine's case, what's happened is that Russia has basically adapted. Because most of Russia's military-industrial complex, other than by some sanctions, hasn't really been affected. Russia's adapted. They've basically been buying drones from Iran. They've been buying munitions from North Korea, and they have a much larger population to draw on. So the real concern is that something that we saw a bit earlier this year and last year is that the West will basically get tired of the conflict, and that Russia will be able to essentially force a peace deal that gives them pretty much everything that they want, all the territories they've conquered and more. And that's a real concern. And as long as the conflict keeps going, it continues to remain a threat and a disruption, especially to the European economy. In terms of Israel and Hamas, the issue is that nobody's quite certain what Israel's endgame is. Originally, it was to rescue the hostages, but it's clear the number of hostages have died. It was to destroy Hamas, but pretty much all the intelligence experts are saying, well, there's no good way to do that or ensure that. So instead, what we're seeing is that more and more pictures of dead children in Gaza, which is raising more and more of the world's opinion against Israel. And the risk that you're seeing, like with Hezbollah, is that they're feeling like maybe now when people are against Israel increasingly in the world stage, when they've mostly been for Israel, especially after October 7th, that this is a good time for them to provoke or do something, because Israel's government's looking fragmented. There have been a number of recent political developments in Israel that suggest that. And the fact that Israel continues to not actually do a ceasefire in Gaza creates a very real problem where they continue to be distracted. So,
economist Kevin Cloud, we'll have to stop there. Wish we had more time, but we'll be preparing for the debate now. And thank you very much for that thorough analysis, as always, and look forward to many more conversations with you. That is prominent economist Kevin Clouden, Chief Global Strategist at the Milken Institute in Santa Monica. Kevin Clouden, thank you again for taking the call.
My pleasure, Frank, and have a wonderful afternoon.
Thank you very, very much, and all the best from all of us here. And right now, out to the freeways we go on 790 KBC. Mottek On Money continues here in 790 KBC. The economy, taxes, geopolitics, energy policy, all expected to be hot topics during the presidential debate tonight, which we'll be hearing right here at 6 on 790 KBC. The Biden administration, intent on preventing gas prices from rising and jeopardizing President Biden's re-election chances, is reportedly going soft on its enemies, including Russia and Iran, in order to keep the oil flowing. According to a senior administration official talking to the Wall Street Journal, the president has wanted to do everything he could to make sure that American consumers have the lowest possible price at the pump, affecting families' daily lives. Right now, the average price for regular gas in Los Angeles is $4.79 a gallon. Premium still up there at $5.17. Diesel now at $5.08 a gallon. Let's bring in energy expert Let's bring in energy expert John Kilduff. We just talked to Kevin Clouden, the economist at the Milken Institute. Joining us live now is John Kilduff, oil analyst at Again Capital and CNBC contributor. John, thank you very much for taking the call, and give us a preview of what we might expect on energy policy here this evening.
Well, I think you may actually hear President Biden tout the fact that the U.S. oil production is at or near a record, and that, I guess oil prices are somewhat lower now than back certainly when the first shots were fired in the latest round of Russia's adventurism out there in Europe. But they're up there still, Frank. I mean, we're above $80 a barrel for WTI. You just quoted the retail price for gasoline in California. Solidly above $3 a gallon here in the East Coast region. So not exactly cheap, if you ask me. And I think people are continuing to strain under that. And certainly part of the inflation problem we had was generated by the oil price spike that we saw a couple of years ago, back again when Russia invaded Ukraine. I will tell you that from the beginning, our greatest fears about lost Russian oil supply and Russian refined products like diesel, fuel, and gasoline never came to pass. The bulk of the countries around the world looked the other way when they realized, the problem they were going to have on their hands with pump prices and energy prices. And of course, in Europe, when they got really decimated, and German industry has still never recovered from the natural gas problem they have from being so reliant on Russia. So it's a key problem. But it's politics really, though, at its best, Frank, because they announce these sanctions, and the countries still go and are able to sell their goods, oil, whether it's Iran, Russia, Venezuela, you name it, they are able to outlet supplies.
All right, the Wall Street Journal on that story that I quoted, and of course the Wall Street Journal also the day after October 7th laid out how Iran was involved in the Hamas terror attack on Israel, by the way, and of course a relatively soft response from the administration following that report, and not pointing a finger directly at Iran. That continues to be an issue, and of course, remember the Keystone XL pipeline that was canceled by the Biden administration. Might that come up again this evening?
I think so, especially by former President Trump, because he's going to be talking about leaning into U.S. energy and natural gas production. I mean, no two ways about it. I'm sure President Trump will bring up the Biden administration's pause on new liquefied natural gas export facilities. All of these things sort of tie into an administration, the Biden administration, really not being very friendly towards the fossil fuel industry. I think that's indisputable, even though they've had to climb down, I think, quite a bit from where they started off, given the realities of politics and prices at the pump. I mean, this is the modern day chicken in every pot issue, really for any president. It brings them down. A spike in oil prices generally has a great track record of inducing or being part of a recession developing here in the U.S. We've been able to avoid that to a degree. And one of the big things, that I think is underappreciated here by the Biden administration is the contribution the oil and gas industry makes to GDP. U.S. exports of crude oil continue to rival and top that of even Saudi Arabia. Our liquefied natural gas footprint, bigger than the historic incumbent Qatar, and we bailed out Europe from their Russian addiction to natural gas problem. So it's going to be interesting to see the dance President Biden is going to try to do here with pleasing the environmental crowd and coming down on the energy industry, while at the same time recognizing just the robustness of the U.S. position and what it has done really to create a great economy here.
John Kilduff, thank you very much for that thoughtful analysis ahead of the debate this evening. We'll be staying tuned. That's oil industry analyst John Kilduff at Again Capital and CNBC contributor, of course, longtime contributor to this program as well. John, thank you very much for taking the call. Stay tuned now for the 790 KBC News Blitz, followed by the debate at 6. This is Mottek On Money on 790 KBC.
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership.
The quality of your life is really comprised of the quality of the questions you ask yourself, because the quality of the questions creates the quality of your thoughts. And so if you can begin to ask better questions in life, you could have a better life. The reason you're not growing, if you're not, is because you're not looking to ask a better question. And when you begin to ask the right questions, I believe you begin to get the right answers.
The Ed Milet Show is available on YouTube or wherever you listen.